Hi everyone, and welcome. Today I want to discuss with you the housing market. I know a lot of channels are talking about whether the housing market is going to crash or whether you should be investing in the market, and though we will be talking about that, I also want to be talking about what the difference is between renting and buying and what my opinions are on that, especially with the current market. So, let's get into it. Most of you can look up another video on YouTube about what the perfect financial decision is for you. You can find out if you need to rent, if you need to buy, what the market's planning to do in the next couple years, and inflation. You can look at all of those factors and make the perfect financial decision. But it's more to it than that. When you're looking through your life, you need to decide what's most important to you and for your family. So some of you might say, oh, I'm not married, I don't have any kids, but a car is really important to me. That might be the number one thing you want in your life. So you need to plan for that and make your financial decisions based on that. Other people might say, hey, I have a wife, kids, and my family is really important to me. I need a house, so I have a consistent place to live and I can get into the school district I want to be in for a consistent amount of time because it's important to my kids. Well, you need to plan for that too. Personal finance is not always about making the perfect financial decision based on numbers. It's about making the right financial decision for you and your family and your circumstances. So now that that's out of the way, let's talk about renting versus buying. So for leasing, something that's really important to some people is to have a consistent monthly payment that they're going to be making. And that's great with renting. That's a pro for sure. You're going to have the same amount every single month that's due. If your AC unit breaks or your water heater breaks, you don't have to worry about that. You call your landlord or the management company, you let them know about it and they fix it. But your cost stays exactly the same month in and month out during that payment period. Another thing that's great is the option to move once the lease is over. Sometimes you get into an area you are really excited about getting into when you first move there, but you find out later it's just not the right place for you, or you didn't really enjoy the area that much, or maybe you're making a little bit more money and want to move to a better area. Renting is great for people like that because you don't have to stay there consistently. You don't have the closing cost of a house. You don't have to worry about finding somebody else to buy it. That's for the landlord to figure out. You just simply find another place to live that's better for you and your circumstances. Now, we talked about the main things for renting that, in my opinion, are the two main factors. Let's move over to buying. What's really important there? Again, we talked about consistency with rent, but you also have consistency when you buy a house. Yeah, you have that monthly payment that's very consistent you're going to be making every single month. It's a mortgage. But you do have to be careful of making sure you buy the right house for you, whether it be new or a previously owned house, that you don't get yourself in a situation where you have a lot of upfront costs that you're going to have to pay soon. Like, again, your AC unit, hot water heater, furnace, anything like that that's really expensive to fix. That's going to be on you to take care of. So make sure you're getting in a situation where you think there's not going to be a lot of repair costs right up front. So you can get used to making that monthly payment and saving a little bit back for when you do have those, as some people call them, rainy days. Another great thing is you're building equity. But we need to talk more about that. What exactly does that mean? Is that really the best thing for people? Well, let's look into it. According to Mortgage News Daily, as of the date of this recording, mortgage rates have hit a high of 6.25%. Yeah, that sounds really high because it is really high. We're going to take a look here and see exactly what this means for you and your mortgage compared to when rates were just at 2.875% a few months ago. Let's get on the computer and look into it. So what I've done below is I've created a new home purchase. So let's assume we're buying a new home here. First thing we're going to look at here is the new home value, which is going to be $400,000. And that's based on what I've been seeing in the market, but even more so, I have this source of Redfin, and you can see here that the median sales price of a new house is $412,000, and that it's came down a little bit. If you look at the bottom of the screen here, right here, you'll be able to see. If we go here, at one point it was up around $430,000, and now it's dropped down to $412,000. So, going with that trend, I think it's going to continue to go down just a little bit due to the interest rates. So we're going to go with a home value of $400,000. We're going to go with a down payment of 5%, which gives us a loan amount of $380,000. Now, something some people are a little confused on is if you need 20% to buy a house. No, you currently don't. Would I recommend trying to have 20%? Yeah, that's a great goal to have. But do you need 20%? No, you don't currently need 20% in order to buy a house. So we're going to go with the 5%. Again, $380,000 for the loan amount. New interest rates for well-qualified buyers are 6.25%. So if you're putting 5% down, you're probably not going to get 6.25%, but we're going to use that rate just for this example. 30-year term loan. And I took out all the property taxes, PMI, which if you're using 5% down, you're going to have PMI, which is the mortgage insurance that you're going to have. And then homeowners insurance, which everyone will have, and some people have an HOA fee depending on where you live. So again, I took all those out. We're going to do a calculation here to see what it is. It gives us a total monthly payment of $2,339.73. Now, something we talked about in a previous video talking about amortization schedules was where the balance was of interest and principal payments. So let's take a breakdown into this a little bit more. And though this isn't a month-by-month breakdown, this shows you that over the term of the whole entire loan, you're going to be paying $380,000 in principal because that's what your loan amounts for. But because of your interest rate being so high, you're going to end up paying $462,000 in interest. That's almost $80,000 of interest that you're going to pay over what the principal balance even is because the interest rate is so high right now. Now, let's do another example. Let's take that back down to where mortgage rates were earlier in the year. Let's go with 3%. Again, exact same house, exact same loan amount, exact same down payment. As we see here, your payment goes down to about $1,600 a month, and that interest is only about $200,000 instead of almost $460,000. That's a huge amount of money, about $160,000 difference over the term of the loan that you're not going to have to pay. This makes a huge difference in your month-to-month payment, but in reality, it makes a huge difference in what's best for you and your family. So let's move back over and we'll discuss that a little bit more. So based on what I just showed you guys, you're going to see that the interest rate really affects how much interest you pay over the lifetime of the loan. I want to tell you something though. On that $400,000 loan, if the rate goes down to 5.3%, that's the break-even point where interest and principal will be the same over the lifetime of the loan. So that's something important to think about. Do you want to take a loan where the interest is going to end up being more than the principal amount is over the lifetime of the loan? Or are you trying to find something where you pay a little bit less interest over the lifetime of the loan than what the principal amount is? Obviously, right now it's really hard to find a rate that low, but hopefully in the future that's not going to be the case. So we just talked about what the interest rate does. But one question that I left at the beginning of the video and I haven't answered yet was if I thought the housing market was going to crash. This is an important factor in a lot of people's mind whether they want to get into the housing market or not. So, do I think it's going to crash? No, not at this time. Obviously, you'll have to do your own market research and decide for yourself what you think is going to happen. But based on what I'm seeing, I just don't think it's going to happen. Interest rates are going up, yes, but we're not seeing housing prices drop drastically. We're also not seeing any reason for people to get rid of their houses for a loss. Yeah, again, a little downturn, but really not compared to what people were paying maybe a year, 2 years ago. Their houses still have positive equity amounts. The other thing is, a lot of people just locked in extremely low interest rates. 2.875, 3%. These are rates that make their monthly payment so low, they really shouldn't have too much of an issue making that payment. And that's shown in the data that I've been seeing, where foreclosure rates are really on pace to match last year's, which was about 150,000 people, or I guess I should say houses, filed for foreclosure last year. That's just an important metric to understand that we're not seeing a housing crash really anytime soon. The main reason prices are going down right now is because interest rates are so high. So, is there going to be some hurt in the market? Probably. Are houses going to continue to appreciate like they have the last 2-3 years? I would say that's unlikely as well. Well, everyone, I hope you enjoyed my take on renting versus buying and what I thought was important to point out. Remember, we're not here to make the perfect financial decisions. We're here to make the perfect financial decisions based on your preferences. If you're trying to get into a house, write down the pros and cons, talk about some of the stuff I just pointed out, and try to decide if this is really the best time for you to get into this market. If it's not, maybe it's time to wait a few years. Wait until the interest rate goes back down, housing prices go down. Try to get in then. But if it's really important to you and one of your main goals to accomplish, then maybe it is time. Just make sure you take a good hard look at the facts before you make your final decision. If you guys enjoyed this content, go ahead and like, subscribe, and leave a comment below. If you want to hear about something else or a different topic that I haven't gotten to yet, go ahead and leave a comment below about it, and I'll try to talk about it in one of my future videos. I think it's important for this community that we talk about anything that you guys want to talk about and that you guys think are important. So with that, I'll leave you guys, and I'll catch you in the next one.